Debbie Marcoux is licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, well, welcome to Mortgage Mom Radio. I am Debbie Marcoux, and today I have got Heidi Schlegelpoints on with me. Heidi has not been on the show in a while. How you doing today, Heidi?
I'm great. How are you?
I am good. It is so nice to have you on. It has been so long. Do you even have any idea how long it's been since you were on the show last?
Not a clue. It's been a while.
It's been a while. So welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And like I said, we've got Heidi Schlegelpoints on with me today. Heidi is my assistant. She is, she is the nuts and bolts of the operation when it comes to getting your files submitted, getting them approved, getting you guys your loans closed. Heidi is our girl. So I love it when you come on. You used to do it with me every week, and then you moved to Arizona, which made it a little bit harder to do this. Obviously, we've got to do it via Zoom when you come on, but I love having you on. It's always a great day. So thank you for doing this. Thank you for getting yourself all ready and dolled up. I appreciate it.
You got it. Yeah, just, little work. And, I do try and clean up a little bit for you when I jump on the show. So
I love it. So for everybody out there listening, guys, this is a show that we do on YouTube. Then we take the sound and we send it to podcast and radio. So if you are listening to the show, you are listening to something that is pre-recorded. But if you want to watch us do it live, you are more than welcome to join. All you have to do is watch it via YouTube. We're on Mondays and Wednesdays at 1 p.m. or there around. Today we started a little late, about 1:15 instead of 1. But if you go to our YouTube channel, Mortgage Mom Radio, and you subscribe and click that notification bell, you will know when we go live. Once a week, or maybe once every week and a half or 2 weeks, I will send out a text message to let you all know that we are on, that we're live. It gives you, just a little easier way to find us. You'll get a link that you can click on right from your text messages or on your phone. If you'd like to do that, you want to follow along, you want to opt in, you want to get those messages from us, then you need to text the word mom. That's MOM. Forward and back to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Text the word mom to that number. You'll opt yourself in. You'll get a link to our phone app, and you will get a text message every now and then from us letting you know we're live so that you can jump in on a show or two. But if you don't want to miss the show, you've got to subscribe to the channel via YouTube. So make sure you check us out, subscribe, click that notification bell, turn it to all so that you get that pop-up on your phone from YouTube alerting you that there is a new show, that we're live, and you can ask us your questions. So we had Heather jump in. She says, looking great, ladies. Carrie says, hey, y'all. And Cindy says, hi, Debbie and Heidi. You both look beautiful. Thank you. Thank you so much, girls. Appreciate that you guys follow along in every episode and can't wait to get you guys back behind the camera again as well. Since this is live, anybody that is listening to me and Heidi, please let us know if you can't hear us, if Heidi's low, if I'm too loud. Please jump in and let us know that. Also, remember that you guys can put your questions right into the feed. I can read those out loud and we can answer them for you. Today's episode is huge. We are announcing that we do now have a home equity line of credit. We can now write you a home equity line of credit. This is very important because we have so many clients that have a low interest rate on their first mortgage, but they are looking for a way to get some cash out of their house. It's also great when we can do it in combination for a purchase, a first and second, to try to help you get maybe rid of that mortgage insurance or get your loan to value down to that next level, get a little bit better interest rate on your home. And then it's super great for bridge loans. So we're going to talk about all of this today on this episode. Heidi, are you pumped?
I am pumped. I'm actually was reading it just to get prepared, and there's actually a lot of great options here for everybody. So
There
I'm
really
very
are.
excited to share it.
Yes, so excited, and it's so great, and it's something that I'm happy that we can now offer this to our clients without having to tell them to call their bank or call their credit union. They can now call us, and we can help them with that financing. So we are going to take a very quick break, but just right out the gates, if you guys are listening, you know you need a home equity line of credit, you're looking for a home equity loan, you want a bridge loan, there's something that you need some money for, give us a call. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Give us a call. Get yourself on the calendar to talk with one of us. Me, Heidi, Heather, Carrie, Cindy. You could talk to all of us and whoever is available first. And you can get your application started and we can get things moving forward for you. So with that, stay tuned. We'll be right back. All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and I've got my nuts and bolts of the operation, Heidi Schlegelpoints, on with me on this show. I'm so excited to have you here. So, Heidi, because I've been doing the majority of the talking already here through this show, I want you to give everybody the first thing that you see that's exciting about the home equity line of credit that we are now offering here at Mortgage Mom Radio.
So to me, the most exciting is that you can go up to a 97.5 loan to value on a home equity line of credit. That's huge. I don't know when the last time I saw something like that was, to be honest. It's been so many years, I'm not going to date myself, but I don't know. I don't know when that was, but it's huge to be able to go to 97.5 loan to value.
Right. So for everybody listening out there, so for a very long time after we went through our recession, right? 07, 08, everybody calls it a different year. That's why we give you a span, 06, 07, 08, 09. It depends on when you were hit personally that you felt that recession. But when we went through that, the first thing that they did was got rid of lines of credit. They weren't available. You couldn't find them anywhere. They were just poof, gone. Then they did finally start to make their way back. And really the first banks that did that were the big, large banks, the big federal institutions. Then we started seeing credit unions come out with them. And then we started seeing, the smaller ones start to pop up again. However, it's been very, very difficult to find any lender that would go past 89.9%. So we'll call it 90% of your combined loan to value. And we'll explain what that means. But it's been very difficult to find any lender that will go above that. When we have, it's been very far and few between, very tiny, small lenders that are doing it or credit unions that would allow us to go to 95. So the fact that we are now going to come right out and say, we're going to give you a loan, or we can give you a loan up to 97.5% of your property value is huge. So Heidi, I'm going to let you explain what does combined loan to value mean? Because I want to make sure that they're understanding our lingo, our right. Tech.
So combined loan to value would be your first and your second, or if you have a third, any liens you have on your property is going to be your value with your loans. So it's going to be if you have, and I always get stuck on this, but your value of $1 million versus your loan of $500,000, so 50% loan to value, right? You've got to take your loan divided by your value, and that's your total loan to value. And then if you have another loan to value, if you have another loan, you have to add that in divided by your actual value.
Right. Correct. So if you currently right now have a first mortgage of $100,000 and your property is worth $200,000, you're at a 50% loan to value. If you have a first of $100,000 and you have a second of $50,000, you're now at 75% loan to value if your home is worth $200,000. Now, one thing we want to make very clear here is that a line of credit is going to go into second position. So you have a first mortgage and a second mortgage. This is going to go into second position. If you have a lien against your property already, another loan, an IRS lien, any kind of lien, a mechanic's lien, anything that is there that is recorded against your property, you will have to pay that off with the new financing in order to be able to get this one, because we do have to make sure that it stays in second position. Heidi looks like she's having some technical errors there with her microphone. So I'm going to keep talking until she figures it out. Are you hearing? Can you hear us, Heidi, or no? Oh, it looks like it's not working. She can't hear us. She lost her sound. So Mikey, go ahead and text her back and just let her know that I'm going to keep going until she can try to figure it out. So we went through the second. We need to make sure that if you have any debt, that we are paying that off to stay in second position for that new equity line of credit. So keep that in mind. There are going to be limits to how much financing that we can offer. So you are not going to be able to get a line of credit that is going to go over $500,000 on that second. That will be a maximum amount. So even if your home is worth $3 million and you only owe $1 million, we can't take you to 97%, 97.5. We're going to be maxed out at a $500,000 loan amount. So just keep that in mind. But this equity line of credit is super huge. It's great. We have so many great things coming about it. We're so excited to be bringing it to you, and we can't wait to start writing these applications. So if you guys want to know more, stay tuned. Don't go anywhere. We'll be right back. All right, welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and today I have Heidi Schlegel-Points on with me. If you guys are watching via YouTube, you can see that Heidi's having some technical difficulties. She did send me a message saying that it is her headphones. So she's trying to grab a different pair, and that way she can jump back in and join us. But until then, I'm going to go ahead and keep the show going and rolling and bringing you guys all of this really exciting information about these lines of credit. Please remember that if you guys want to get your application started, if you'd like to get your line of credit, in process, you've got to apply for it. You have to call us. You have to talk to us. Number one, you guys are welcome to go to the website. Go to mortgagemomradio.com, and you are absolutely welcome to start your application right there. You do not have to wait. You do not have to talk to us. If you have our phone application, you can literally apply online right through the phone. That is absolutely okay. However, if you'd like to talk to us, which is usually a really good idea, we want to make sure that we are giving you the information, that we're talking about your credit score, that we're talking about your home's value, we're talking about your current first mortgage, how much money are you looking to get out of your home. We want to go through all of that with you because, of course, we don't want anybody to apply for a loan that we can't give them. And so we'd rather be able to educate you, give you the information, talk about you, your personal scenario, and make sure that the line of credit is something that we have available that is going to fit your personal needs. So it's always best to get on the phone with us or send me an email, somehow contact us, get in touch, talk to us, let's communicate, and then let's get you moving forward. However, if you're busy, you don't have time, or you know your credit score is perfect, you know your home value is big, you know you've got more than enough equity to get this line of credit done, you're not concerned about your income, then feel free. Go to mortgagemomradio.com, click on that application button, get that application started, and the very first person who is available once you have completed your application will reach out, give you a call, and talk to you all about what we see, what you're looking to do, what you're looking for, and get you moving forward. So keep that in mind. How do you get an appointment? How do you talk to us on the phone? Will you give us a call? It's 844-935-3634. That's 844. We lend for you. WELEND and the number 4. That is the telephone number to call us. That is also the telephone number to text us. It's not to text us to ask us questions. It is an unmonitored box. But if you text the word mom to that number, you will opt yourself in to get a text message once a week or once every couple of weeks when we do go live. That way you get to jump in and join us and watch us do the show, watch us do it live, and ask your questions right into the feed. One more thing about that number that I'd like to mention option is if you've been thinking about coming out to one of our workshops, our homeowner workshop or our home buyer workshop, you can text the word RSVP, or it's not really a word, I guess it's four digits, 4 letters. But if you text RSVP to 844-935-3634, you will get the links to go ahead and get your tickets. So please feel free to do that as well. We'd love to see you come on out to our home buyer workshop or our homeowner workshop. We're going to have these ongoing throughout the summer. So you pick, if it doesn't work for you now, then you've already opted in and you will get a link to the next one once we have it available. So once again, it's 844-935-3634. Give us a call, get on the calendar, talk to one of us, talk to us about what you're looking to do. We can help you get that application started for your equity line of credit, or text the word mom or text the word RSVP to get your information for the home buyer workshops. So back to the equity lines of credit. Let's get on to those. So we talked about how we could go to 97% of the value of your home with a new line of credit. That is a combined value. So obviously I can't give you, if you owe 100% on your home today, I cannot give you a 97% line of credit. I can only go up to 97% total value. So whatever you owe today, we need to take that into consideration. Whatever your home is worth today, we take that into consideration, and we can give you the difference up to 97.5% of the total value. So this is huge. So we're going to talk a little bit about how things can differ. If you call me and you say, well, that's what I would like, where might I say no, or why might that change? So for example, if your credit score is a 740 or better, you are an owner occupied property, we will be able to take you to that 97.5 combined loan to value, as long as you're not exceeding a $500,000 line of credit. So that is where we get stuck. Now, if your credit score is 680, for example, we're only going to be able to go to 95%. If your credit score is 640, we'll only be able to go to 90. And if your credit score is 620, we will only be able to go to 70. So you can see how as your credit score declines, the risk on the file does go up, which means that we are not going to be able to lend quite as much to you. But what it also does tell you, and it does show you, is that everybody who has a property who can qualify income-wise, and we'll get into that in a little bit here as well, but if you can qualify income-wise, you do have some equity in your property. Even if you've got some problems going on with your credit, we are taking lower credit scores for this program. So we will have to speak with you if you've got a credit score of a 620, you've got some missed mortgage payments possibly. That's going to be a problem. We're probably not going to be able to offer a line of credit to you if you have late payments within the last 12 months. But again, it is so important to get on the phone with us, talk to us, find out what is available, find out what you can do. So give us a call. It's 844-935-3634. That's 844. We lend for you. That's WELEND and the number 4. We're going to take a super quick break, and we get back. I'm going to keep going through this, making sure you guys know what all of your options are. What are the rules? We're going to talk about some home equity loans. We're going to talk about bridge loans, and hopefully Heidi's going to have the ability to get back on, find her headphones, and join in. But if not, that's okay. I'm Debbie Marcoux. I'm the mortgage mom, and I'm going to keep bringing you guys your information. Stay tuned. All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today with super exciting news, we are letting you know that we have a home equity line of credit available to you. In the past, somebody would call me, and if they were doing a first mortgage, I could, in combination, add an additional line of credit for them. But if they weren't doing an actual home mortgage, with me a first mortgage, I was not able to offer them this product. This is super fantastic news for all of you that did refinance over the last couple of years, purchased your home over the last couple of years. You've all locked in fantastic interest rates. You've got a pretty good chunk of money on that balance, at that low interest rate of 3%, 2%, 4% that you don't want to get rid of, but you're looking to take out some money for home improvements. You're looking to take out some money to pay off some debts. You're looking to take out some money to make a large purchase. Maybe you're looking for, an RV, or maybe you're looking for a boat, or maybe you need to buy yourself a new car. And you just feel like taking it from your home is going to be a better option than refinancing your first mortgage for a higher interest rate. Because let's face it, guys, interest rates over the last couple of years have been significantly lower than where they are today. So this is just another option that we are bringing to you, making sure that you know is available, and we would love to help you get what you need. So here we go. Home equity lines of credit. We're still on that. So far through the show, I've told you we can go up to 97.5%. combined total loan to value. So that's pretty cool. That is if you have a 740 credit score and the property is owner occupied. Now, the cool thing is I said, and if it's owner occupied. Many lines of credit will do owner occupied only. It is very difficult to find a line of credit for somebody for an investment property. The line of credit that I am talking about right now, not the home equity loan, and not the bridge loan, but the home equity line of credit, we cannot do if you are an investor against one of your investment properties. However, we can offer it to you for a second home. So if you have a second home or a vacation property, we can do a line of credit against those properties, and we can go up to 80% of the value of that home in combined loan to value. So again, we're going to go over that really quick to make sure that it makes sense. If you owe $100,000 and your property is worth $200,000, that is a 50% loan to value. If I can go up to 80% of the value of your $200,000 property, that means your total loans in combination could be $180,000. I'm sorry. Let me go backwards. It'd be $160,000. So we would be able to keep your $100,000 and we'd be able to do your $60,000 in a line of credit. So pretty cool for a second home or a vacation property. So what are the terms? What can we do here? So the minimum amount that you can take out is $50,000. And I am going to look down at my notes quite a bit because it's so much information and I just got it today that it's not possible for me to have all of this memorized just yet. So we can go up to minimum loan amount would be $50,000. Like I mentioned earlier, we can go up to $500,000 in total line amount. The product terms can be a 30-year variable. So it is going to be an adjustable loan, and it is going to be a 10-year interest only with a 20-year fully amortized payment. So how does that work? Let me explain that for you. So we are going to do a line of credit that is going to be interest only for the first 10 years. So for the first 10 years, we're going to take the interest rate that they are going to give you. We're going to take the amount that you owe, which obviously is going to vary every month because it's a lot like a credit card. A home equity line of credit, you're going to pay against what you owe. You are not going to pay anything or pay any interest if the balance is zero. But the line of credit remains open. So you can go and use it, pay it back, use it, pay it back. You pay interest based on the balance you owe. For the first 10 years, you pay an interest-only payment on the balance owed. And at the end of the 10 years, it will turn into a 20-year fully amortized loan. So the monthly payment will be fully amortized. So when you make the payment, it will be paying the balance down. And you will not be able to draw any longer. So your draw period where you can use it, pay it, will only be good and open for the first 10 years. After that, then you're on your way to getting it paid off if it is not already paid off. So just keep that in mind. Those are the product terms. You can take additional draws. So you can't take an additional draw within the first 90 days. So that is something to keep in mind. You do need to make sure that if there is an amount that you are looking for, that you want to have cash in hand, trying to do some home improvements, you're trying to pay off some debts, you're trying to make that car purchase. You want to make sure that you are taking everything that you need and that you want at that first initial draw. That way you've got it in the bank and you can use it as you see fit. You will not be able to draw against it for the first 90 days after that initial time frame. After 90 days, your account is set up. Everything is set up. Everything is ready to go. You've got everything that you need to access pay. And after that, you'll be able to do those draws. So just keep in mind that very first draw out the gates, make sure that you're taking what you need to take for that line of credit and to get accomplished what you need to accomplish. And the minimum amount cannot exceed $1,000 of the credit limit after that 90 days. So that is actually really good to know. Heidi, are you back? Are your ears working?
Back.
You can hear us? Yay. Okay. So Heidi is back on with us, which is fantastic. So Heidi, I'm reading here on the additional draws. It says prohibited during the first 90 days following the closing date. So that was good to know. I already brought that up to everybody. But then it says the minimum $1,000 not to exceed the credit limit. So what I want to explain to everybody is if you decide that you want to go in and you want to take additional money, so we're past the 90-day mark, we're at day 120, and now you need to go in and you need to draw more. You're not going to be able to draw $100, $200, $300. The minimum that you can take at a time is $1,000, and you can take as big as up to whatever you've got available on that line of credit. So if you've got $49,000 available, you can take $1,000 or $49,000. You can't take $100 or $200. So just keep that in mind. $1,000 at a time is going to be your minimum. So we're going to talk about the rate is adjustable. If you want to know more about that, I think that would be a show that would go on and on and on if I get into the full, complete details of everything. But it is an adjustable rate. It is tied to the Federal Reserve prime rate, and it is an equity line of credit. So if the adjustable piece scares you, we do have equity loans that we're going to talk about as well. So don't go anywhere. Stay tuned. We're going to take a super quick break, but if you want to know more, you want to get your application started, you want to talk to somebody about what you can or can't do, give us a call. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Give us a call. Get yourself booked for an appointment. Remember that I do this show live on Mondays and Wednesdays at 1 p.m. If you're listening by radio, this is pre-recorded from the same week or the week previous. And you guys can call on Saturday and Sunday, and you can speak with somebody right away. You can make an appointment. If the call service grabs a call, that is because they are all on the phone. But book an appointment. You will get a call back even on Saturday and Sunday. If you call Monday through Friday, if you call right now, you can actually get transferred to somebody live who can answer your questions right now immediately. So please feel free to give us a call the office. It's the best thing that you could do. Or go to our website, go to mortgagemomradio.com, and you can actually send us a message. You can go right through the Contact Us page, and you can send us a message, and you can ask your questions there. So stay tuned. We're going to take a super quick break. Now that I've got Heidi back, we're going to figure out where we're at, and we're going to pick back up where we left off. We'll see you real soon. All right. So welcome back to Mortgage Mom Radio. I am Debbie Marcoux, and I have Heidi Schlegel-Points on with me. She is the nuts and bolts of getting your loan into underwriting and making sure that it is approved. So obviously I'm a loan officer. I know what I'm doing, and all my girls are loan officers, but we take your loans, we put it all together, we make it pretty, we give it to Heidi, she makes it better. And then she gets it off to underwriting to get that loan approval. So I'm so happy to have you on today, Heidi. I'm sorry that we had some technical difficulties for you, but hopefully we can keep you on through the rest of the show.
I will do my best. I am definitely not a tech person, so running around trying to fix it, I do my best.
Yeah, it is what it is. And you know what? We've tried to, get you all kinds of great hardware and software and microphones and everything else. And if this doesn't work out, then I say next show, we just do a straight up laptop. Straight
There
up
you
laptop.
go. Exactly.
Old school, old school. Jennifer
school.
jumped on, Jennifer, and she says, hello all. Jennifer, thanks so much for watching. Again, I want to bring this to you guys' attention. If you're listening to the show Saturday and Sunday, we love that you're listening. We want you to call with questions, but we'd love it even more if you guys followed along with us when we do it live. We are live on YouTube. So if you search Mortgage Mom Radio on YouTube, you can subscribe to the channel and turn on that notification bell to know when we go live. You can jump onto the show. You can watch us do it. You can see our errors. You can see our messes, and you can ask us your questions. And that's the most important piece. You get to ask your questions right into the feed to get your answers right away. So please follow along. We'd love to have you there. If you're watching the show right now via YouTube or Facebook, even Twitch, please give us a thumbs up. That definitely helps the algorithm and it keeps this show going. It helps us get the content out to even more people, more viewers when they're out there searching and needing some help. We are Mortgage Mom Radio. We are all about the education and your family and your future. And we're trying to bring you all of the most up-to-date and important information that we possibly can. So today it's all about equity lines of credit. We've given you so much information already over the last 30 minutes, but we're going to keep going. So Heidi, during the break, I mentioned that we're going to talk about appraisals. So
Yes.
what do you got for us?
Okay. So depending on the loan amount, you may or may not require a full appraisal. We may be able to do an AVM, and I wish I remember what that stood for.
It's an automated value.
Automated value. Okay.
Yeah.
And I was like, automated something.
Yep, automated value. It's
value.
basically it's like a 10-second thing. We run it and it comes back. Boom.
Right. So they will require still an exterior drive-by review. Basically, they want to make sure it's still standing, property's still there. They're going to do an automated value. If it's $250,000 line or under, then you can get an automated value if, again, the value is what we're looking for, and they're going to do an exterior drive-by. If you have it at 251 or higher, then we're going to require a full interior exterior appraisal to go out and give us a full appraised value report.
So you're telling me if my property burned down and I get an automated value because they didn't know it burned down, I can't get my line of credit?
No, nope. They're not going to give you one. They really want to make sure your house is there and in good condition.
Yeah. But obviously I was just kidding. But what is really nice about an automated value is if you do have things that let's say that you're in the middle, we get this call all the time. I'm in the middle of my renovation and it's going to cost me more than I expected and I ran out of money. Is there any way that you can help me? And in the past, the problem has been when we do the interior, full appraisal, right? We're going to see that you've got some health and safety issues. The floors aren't finished. The bathroom isn't done. You don't have a toilet. Your kitchen's pulled apart, right? And we can't lend on that with a normal first mortgage that's going to require an appraisal. So if we keep that line of credit under that $250,000 mark, and here's the big kicker, it is an automated value. So you have to be willing to accept the value that the AVM gives us. If you feel that your home is worth a lot more money and we need a higher value in order for you to get the money or the cash that you need, then obviously we have to do a full appraisal. But for somebody that is in the middle of repairs, or maybe they're getting the money to do the repairs, as long as that home looks good from the outside, from the drive-by, then we're going to be good to go. We can move forward as long as we're willing to accept that value that the computer system automated and gave us.
Exactly. And we get it all the time. I mean, how many calls do we get? Well, I was in the middle and it turns out it's going to cost a lot more and I don't have any flooring and I don't have a toilet and my shower's torn apart or my kitchen's torn apart. So I don't have, a stove and I don't have a sink and is that a problem? Yeah, it's a problem.
Yeah.
We can't lend on something that is not functional to live in.
Right. Correct. So I think that that's awesome. I love the fact that we have the opportunity of the AVM, but I also love the fact that we have the opportunity of a full-blown appraisal. So if you are somebody that's looking to, like I mentioned a little bit earlier, you want to maybe do a large purchase. You're trying to buy yourself an RV. You feel it'd be best to have that tied against your property. And, you really need to have the value of the home come in for what it's worth. And you just did a bunch of upgrades and you just, remodeled the home. And, it's definitely worth more money than what that automated computer value is going to give you. We do have the opportunity to do a complete appraisal. So if that AVM doesn't come in where we want it to be, and you feel that your home is worth more, then that would be your opportunity and your choice to order that full-blown appraisal. So that is great that they give us that option, that we're not just stuck with what they say that it's worth. And if that doesn't work, then you can't move forward. I love that they give us the option to do both.
Absolutely. Yep.
Yeah. So let's talk really quick income. I know that people, that is something that is always of concern. Will I qualify to do the line of credit? What do I have to make, or how much money do I have to make, or can I get one if I'm self-employed? So I love talking about income, and I'm going to let you take self-employed. So for a self-employed borrower, what do we need?
Okay. So self-employed, we do have to qualify you on a 2-year average. You are going to have to provide year-to-date profit and loss and balance sheet to show us where you're at. We do have to get your tax transcripts. So what that means is we order that through the IRS. So we will order those. They do take a long time to get. So sometimes we will ask you to go on, get signed up with the IRS.org and pull those for us. But they are required if you're self-employed, that we do have to have the 2-year history. We are going to average that history, and we are going to look at your profit and loss and balance sheet for year to date.
So they're going to be a little tiny bit more strict than some of the other programs that we have available for self-employed borrowers. The reason for that, keep this in mind, guys, this is an equity line of credit, or like I mentioned at the beginning of the show, a second mortgage, second lien in second position. So your first mortgage is always going to be in first position. They get first right of a foreclosure to get paid back and to get paid off. When you're in second position, you come after that first mortgage does. You are not the priority. So it is more risky for a bank to give you a second mortgage versus a first. And for that reason, they are going to be a little bit more cautious in the income. So no 1-year tax return, no bank statement program or product. It is going to be back to old school, old fashioned, self-employed, 2 years tax returns with an average, year to date, profit and loss, balance sheet, making sure that your, business is still functioning, viable, and earning income that it needs to pay back the loan that you're taking. So they are going to be just a little bit more careful due to the risk of being in that second position. So Heidi, what's it say about just normal employed borrowers? What do we got?
So normal employed borrowers, we're going to look at one. I want to be clear about how long your credit items are good for. Is there 60 days, which is shorter than what you would expect on a normal first mortgage loan. So it is a shorter amount of time. So you may have to update your item. So just be aware of that, because they are allowing it to be good and viable for a shorter period. And again, it goes back to what Debbie just said. It is a higher risk loan for them because they are taking second position. As far as documentation, doesn't look like it's anything different from what we would see on a first mortgage. So you're going to look at your pay stubs, your W-2s. So most recent 30 days pay stub, 2 years W-2s, possibly 1 year. But again, it's not really specific here for me. So you would look at a normal average, most recent 30 days pay stub, 2 years W-2s, and they're going to look at an average there.
Gotcha. Perfect. Okay. So again, if you guys have any questions, you want to know if this is something that you're going to qualify for, you want to know personally if you can get into this product, it really is truly awesome. It's amazing. We've had phone call after phone call after phone call from people that are looking for a line of credit. They can't get what they need from their bank or their credit union. They can't get enough out. They won't go to a high enough combined loan to value to get them the cash. Their credit score is a little bit lower than what their bank will allow. They don't want to touch their first mortgage because they love the interest rate that they already have locked in on a 30-year fixed. They're not looking to get rid of that. They don't want to refinance it. They just want a way to get the money out of the house to do what it is that they're looking to do, whether that be a large purchase or a home improvement or paying off debts, whatever that reason might be. So if you guys would like to know more, you want to know if this is going to work for you, give us a call. We will go through it with you. We will make sure that it's something that is a fit, and then you can go ahead and you can do your application. So give us a call. It's 844-935-3634. That's 844 We Lend for You. That's WELEND and the number 4. So 844 We Lend for You. Give us a call. Remember, Monday through Friday, 9 to 5, we've got people answering the phone 9 to 5 every day, all day long. And you could probably get transferred to somebody immediately. After hours, we do have a call service who will pick up the calls and they can book you for an appointment. On the weekends, we do have somebody that is on call ready to take those calls. If you get our call service and they offer to schedule you an appointment, make one for the same day, because we do make appointments on Saturdays and Sundays. So if you get somebody offering the appointment, just make it. You're going to get a call back. Or you might even have one of the girls pick up the phone who will talk to you immediately. No appointment required. So the best thing that you could do is just dial the number. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. With that, we're going to take a super quick break and we'll be right back. All right. So welcome back to Mortgage Mom Radio. I'm Debbie Marcoux, and today I've got Heidi Schlegelpoints on with me. She is on my team, and she is the nuts and bolts of our operation when it comes to getting your loan submitted and approved. So I love it when she comes on. She is such a great asset to us. We've been talking home equity lines of credit, Mortgage Mom Radio. Woohoo! We can now offer those, super excited, as a standalone, which means that you do not need to be doing a first mortgage with us in order for us to offer you the product. So that is super exciting. We're going to jump now into home equity loans. So first thing that comes to mind for you, Heidi, when you hear the difference about home equity line of credit versus home equity loan, give it to me. What are you hearing?
Fixed rate.
Exactly. Fixed rate, fixed term, right?
Fixed rate, fixed term. Yes.
So I explained to everybody while you were kind of having some mechanical difficulties with the computer and the sound, that a home equity line of credit is a lot like a credit card. Best way to explain it.
Absolutely.
What you owe, you pay on. The balance due is going to be calculated by your interest rate. You're going to make an interest-only payment. That's not going to pay your balance down, but what you pay is based on what you owe, and you can borrow it, pay it back, borrow it, pay it back. A home equity loan is exactly what it sounds like. You are taking out a loan at a fixed rate, and you are going to have a monthly payment that is going to pay it off within the term of that loan. So I know that both of us just got this matrix today. We just got the information. I was so excited. I didn't even give us 2 minutes to read it first before we started the show. Do you see anything on our paperwork that we both keep looking down at that tells us what our terms are for these loans, the home equity loans?
So they do have, it is fixed rate. I don't have the rate, so I can't go into that, but you can do a 5-year, a 10-year, 15-year, 20-year, 25-year, or a 30-year loan.
For the payback.
For the payback, exactly. Which is fantastic on here. I mean, and I'll be honest, so I did do one of these loans because I did not want the adjustable. I'm a very conservative person when it comes to my finances. And I didn't want to refinance my first, but I needed to get a loan and I wanted to consolidate some debt. So I did do fixed second. A HE loan is what we're calling it, but a fixed second. And it was great for me. And I was able to pay it off very quickly. So I think that these loans are fantastic.
Well, and you know what I think is great about them too is, like, for example, if you were looking to buy a car, a lot of people don't like to refinance their home and pay off a car because a car is usually a 5 or 6 or 7-year loan, and they don't want to then put it into a 30-year fix. So since they're giving us the option of writing it as a 5 or a 10 or a 15 or a 20 or a 25 or 30, right? You can kind of select that payment that you need for what it is that you're doing, with the money. If you are doing home improvement and you're improving the property, there, you're taking out the cash to redo the kitchen or redo do an addition, right? Whatever that it might be.
Right.
Maybe it's not scary to do a 30-year term on that, because that is what your loan would be if it was a mortgage, and it is for the property, it is for the home, where maybe doing a 30-year loan on a car would be a little bit scary, right? Because you're going to turn those cars all over every, 3, 4, 5 years. I mean, if you're in my family, we're turning these stupid things over every year.
Right.
So, to finance something like that over 30 years would be just truly, you're just putting additional debt on your home, and you may not even have the asset to see it, right? But when you're improving your home, you have that asset stays. It's part of your home.
Right. It's part of your home. Exactly.
So very exciting. So what are our the appraisal requirements on this one? Does it say we've got an AVM with an exterior? I'm going to let you jump in.
Yes. So we do have very similar to the equity line. Again, you have an AVM with an exterior for up to $250,000, and then anything above $250,000, you're going to need a full appraisal.
Love it. Love it. So
very
same.
Similar. Same.
Yep.
Exactly.
It looks to me really quickly like the income is going to be the same as well as what we talked about with the line of credit. Same for self-employed, same for employed borrowers, kind of basic standard stuff. Looks like the debt to income ratio, it's going to allow us to go to a higher number on that equity loan versus the equity line. So the equity line did allow debt to income up to 45%, where the equity loan will allow us to go up to a debt to income of 50%. So that is really good. And understand the reason why they would give you more in an equity loan is because the payment won't change. It's not adjustable. It's not tied to the Federal Reserve prime rate. So as the prime rate goes up and your monthly payment goes up, if we started you at a 50% debt ratio, you might end up in a situation where you can't pay this loan back and you lose your house. We're not looking to put anybody into anything that they might lose. But with an actual loan, we can go up to 50% because we know that payment isn't going to change. It will stay the same for the term that you select and that you sign up for. So that's pretty cool. I like that.
Right.
I definitely like that.
Yeah. The other great thing on this is available for investment properties, whereas the home equity line is not available on investment. So this goes up to a 90% CLTV on investment.
Ooh.
And again, this is based on credit score, right? It does tier down based on credit. But this is available on owner occupied second home and investment.
Right. And I did mention that in the show at the beginning, talking about the equity line of credit, is that most banks are going to do owner occupied only. It is hard to find a line of credit on a second home. We are allowing the second home up to 80, again, based on credit score. So we went through that at the beginning of the show. They do have, they're going to tier it down how much that you can get out of the property based on what your credit score is. The lower the credit score, the less you're going to be able to take. But I did mention that it is very, very difficult to find financing in second position for an investment property. So I want everybody listening to understand, if you own an investment property, this might be the key to what you need to get the cash that you need, that you've been looking for. I have a guy that comes to mind right now who listens to the show, lives in Havasu, has 4 Airbnbs. He was looking just last year to try to pull money out of one of the Airbnbs so that he could build another property on a vacant lot that he owned. And he could not find a line of credit from anybody. Well, this would be his chance. We could do an equity loan on that one of his investment properties, get him the cash that he needed so that he could build that next property and now start income producing again on another Airbnb. So I might just have to give him a call. I'm super excited.
And they go up to 10 financed investment properties on this.
Ooh, that's good too.
Which is big. Yeah.
Yeah. Yeah. We've got a lot of different lenders that will cap you usually at 4 finance. So 10 finance. That's awesome. That's amazing. Wow, I'm so excited.
On
I'm
the
getting
investment.
pumped as we're reading through this. So I just want everybody
Yeah.
to understand that's listening that this is the first time that me and Heidi have both read through these. We literally got them about 3 minutes before we started recording. So this is all really super great, super exciting. And I'm getting more excited the longer that this show goes. So I hope you guys are hearing it in my voice. I do want you to call us and talk to us if you've been thinking about taking out a line of credit. You've been being told, no, you can't get one. Here's the most recent thing that I was told from a client who called me to ask. He said that he called his bank and he said he wanted a line of credit. They told him that the application process, it was about 6 weeks that it was taking currently to get a line of credit done. So he waited out his 6 weeks and then he called back again and he said, well, we're so very sorry, but when we told you that, that's what we thought. Actually, as of today, we're at about 12 weeks to be able to get your line of credit done. So, oh my goodness, call us, you guys. If you're having problems, if you haven't been able to get one, you can't find one, you're an investor, you need a loan, you need an equity line of credit. We're so excited. This is amazing.
Yes. And there's so much, I mean, we're literally looking at these papers, pulling out, what we think is the most important details to share with you. And again, it's tiered. It's going to depend on your state. It's going to depend on a lot of information, but we can only go over so much in an hour show. So you do need to call us. You need to get on the books with one of the girls, with Debbie, one of the girls, myself, and we can go over your individual scenario, of course.
Yes. Hey, so do you know our number, Heidi?
Sure, I do.
It's 844-935-3634. So can you spell it, Heidi?
Yes. WELEND, which spells we lend for you.
That's right. Give us a call, get on the books, talk to somebody immediately. Just depends on the day and time that you call, whether we've got someone immediately answering or whether you just need to book an appointment. Trust me, you can get an appointment same day. We're going to call you back. That's Monday through Sunday. We're working around the clock, guys. Give us a call, book the appointment, or talk to somebody immediately when they answer. So we definitely want to get you guys started. We want to get you headed in the right direction. We are not 6 to 12 weeks out to get your line of credit done. We're definitely going to be able to get those done much quicker than that. If we can get the automated value to come through to work for your scenario, that's going to take time off of the start to finish, probably about a 2-week close, 14 days or so. If we need the appraisal, that could take, anywhere from 3 to 4 weeks to get you closed up. So just depending on how long it takes to get our appraiser out there and get the report back. But just really normal, very normal timelines and timeframes with us. So if you've been running into that situation, you've been trying, you've been waiting, you're not getting answers, you're not getting information, you haven't been able to find the product that you need, you're being told that your credit score is too low, you can't do it on an investment property, your home's torn apart, you can't get an appraiser to walk through your door, whatever that reason is, give us a call and talk to us. Let us see if we can't help you. But this is just so super exciting. I'm going to actually probably start to pencil out whether this works for me. I got a little bit of work left that I need to do to my house that I didn't get to finish, and I really don't want to pull out any more money. So right. I might of my own personal cash. So I'm going to start looking into this. I think this is awesome. We've got just a couple minutes left of the show. I don't want to go away from bridge loans. I don't want to miss that piece. So we're going to take a super fast break. When we get back, I'm going to roll over the bridge loan stuff really fast, and we're going to call it a day. But stay tuned. We'll be right back. All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux, and today I have got Heidi Schlegelpoints on with me. We are talking all about our new equity line of credit, equity loan, and bridge loans that we are announcing that we have available for you, which we're super excited about. The bridge loan, that's what I said right before the break. We were going to get into that. I didn't want to pass it by because it is such a cool product. So let's talk about it really, really fast. Back about... I'd say 8 weeks ago or so, maybe 2 months ago, we did talk about bridge loans. And what is a bridge loan? So basically, if you own a property today and you want to go purchase another home, but you want to be able to purchase the home without having to sell your house first. So what you'd really like to do for your kids' sake, for your dog's sake, for your marriage's sake, is you want to buy a new home, move, clean up the property, and then list it for sale so that you don't have the front yard with the sign, and you don't have to try to keep your kid's room clean, and you don't have to try to keep the dog or take the dog for a walk or get somebody to watch the dog when, you know, the realtors call to say they're going to show the home. A bridge loan is going to help you extract the equity in your house to put down on your new house in order to close and then sell. So that's kind of the very quick down and dirty of a bridge loan. Bridge loans have been very, very hard to come by in all of these recent years. We are just finally getting one. This is the first bridge loan I've actually had for any company or from any company that I have worked for since 2006. So I'm just going to throw that out there. I have not personally had one that I could have offered to you. Options for a bridge loan at that point in time without having one available would have been hard money, maybe having a family member gift you the funds, having to do a first and second on the new home that you're purchasing, and then selling your house and paying the second off so that ultimately you get to the loan that you need on the new home purchase. But this is a bridge loan. This is awesome. So we are going to be able to do a line of credit against your property that you own that you are planning on selling. So keep that in mind. So Heidi, what's it tell us that we can actually take out of that home for that bridge loan?
So for a owner occupied, we can go up to 80% CLTV, 85, I'm sorry, I can't read, 85% CLTV. And for a second home, 75% CLTV.
Okay. So what that means is that if your home is worth $100,000, we can take up to $75,000 out just to try to keep math simple. I understand that most people listening to the show do not have a house that is worth $100,000, but this is just the easiest way to explain the math. $75,000 is what we could give you. Now, if you have just like this equity loan and equity line and CLTV, and we were explaining what combined loan to value means, if you owe $50,000 on your property, you will only be able to get a bridge loan of an additional $25,000, assuming that you have your 740 credit score and this is an owner occupied residence. But it still gives you that $25,000 that you need for down payment against your next purchase, and it helps you to be able to purchase now, sell after. So very, very cool. It's going to change just like the others based on credit score. So what is the lowest credit score, Heidi, that it's showing on the matrix that they would be able to take advantage of this product?
A 680.
Okay.
Minimum 680, and that's for owner occupied and second home.
Okay. And that would allow us to go up to what loan to value?
80% for owner occupied and 75 still for second home.
Okay, so this one is not going to be available for an investor or an investment property. So just keep that in mind. We do have to take the cash from an owner occupied property or a second home. So I don't know. Bridge loans are really great. They've got tons of different ways that they calculate the debt to income, how we do that. But again, I haven't had one of these loans that I could offer to anybody in many, many, many years now. I mean, we're talking over 15. I think we're at 17 years. I haven't seen one. I told you guys I haven't seen since about 05, 06. So just the fact that we have this product now is really super exciting. So last thing that I want to talk about before we call it, Heidi, is let's just talk about the terms of it. I know this one's going to have a balloon because obviously you're getting the bridge because your goal is to sell. Your goal is not to keep this house. It is not to rent it out and make it an investment property. It is to sell the home. So it's going to have a little bit different terms, and there should be a balloon. So just give it to us really fast.
11 months. So
Okay.
you can have this loan for 11 months. So you can pay interest only payments for 11 months, and then you have a balloon at that 11-month period.
So you owe that payment. You've got to pay it back. Guys, I'm going to tell you one thing about a balloon. It's not a joke. It's not a warning. It is owed. And if you don't pay it back, they can foreclose. So again, we're not going to get you into this product unless you are certain that your goal is going to be to sell that property. But the fact that we have it and it's available is super awesome. We're over our time for the hour. I am so excited about this. We might have to do a completely second episode to keep going. Kind of like the USDA show. We need to get back to that. I need to get back to the recap of things that we've brought up over the last couple of months. We've had such amazing, great topics and shows. I'm just so excited about all of it. But again, if you guys have any questions at all, give us a call. It's 844 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. You've got people that are standing by to take the call right now. If they're on the phone or go to call service, you can book yourself an appointment. And I want to remind everybody, we've got home buyer and home owner workshops. Super duper cool. If you take that same telephone number and you text MOM, you'll be opted in to get a link every now and then to be able to watch the show and get the updates about the workshops that are coming. But if you want the specific information about our workshops that are available, text the word or text the letters RSVP. So 844-935-3634. Text RSVP and you will get the links to both of our workshops. You can check them out and you get your free tickets right online. We hope you guys enjoyed the show. We can't wait to hear from all of you. We can't wait to get those applications started, and we are here to answer those questions if you need us. I hope you have a fantastic rest of your week, and we're doing it again next Monday. Thank you so much, Heidi. You were awesome. You were amazing. I love it when you're on.
Thank you. You never know. If you watch again, I might run around like a chicken with my head cut off again. So,
hey, it happens. That's why we're doing it live, and we want people to watch us do it on YouTube. So you guys check out our channel, subscribe, and turn on that notification bell. We'll be back next week. Talk to y'all real soon.
Bye. Thank you.
Debbie Marcoux, licensed by the Department of Financial Institutions and MLS ID 237926. Also licensed in Arizona 0941504, Florida LO 76508, Georgia 69178, Idaho, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.